Good afternoon. This is Bakes, Kevin Baker with Bakes Takes. Welcome to the podcast. This is Saturday, March 13th. Let's get right into it, folks. Number one, vaccines, check. Number two, stimulus, check. Number three, stocks up? No check yet. We'll go into all that. Why I do this, Bobby and Jack, my sons, they're in their 20s. They were in undergrad business programs, and they and their friends would fire questions at me. And they figured that I knew something because I went through the 87 crash and been in 2 mutual funds, 2 hedge funds, 2 institutional firms. I kind of know where the bodies are buried. Studied technical analysis a great deal. I do a lot of fundamental work, but I believe in charts and price and volume. And I go technicals first, fundamentals second. It's not right or wrong. It's just what works for me. I read maybe the things that you don't care about, or at least to the extent that I do. Barron's, The Economist. I listen to dozens of podcasts. I read dozens of newsletters, and I cherry pick and I try to bring to you what is what are profitable opportunities. And that's all they are, profitable opportunities. Nothing works out all the time, but we're doing pretty well. I monitor what my Google alerts bring, and I bring that to you as well. I always point you to them. I always give attribution. And if you want to do that work and follow up, you can. But know that I'll do it for you, and I eat home cooking. All I talk about is what I've invested in, what I'm interested in. I have no conflicts. Now, having said all that, disclaimer, this is not investment advice. Please conduct and share your own due diligence. And the more this becomes a community, interactive, with ideas flowing back and forth, the more fun we're going to have, and the more money we're going to make, in my view. So, first fan mail or question. Mike, my producer, at the tail end of last week said, it was a pretty thoughtful question, I thought. Why play this short-term game? Should I pay attention daily? If I focus on the 10-year outlook, I'd probably make more money. His words, not mine. And I've been thinking about it all week, frankly, and got up early to crystallize the show. And I left in, just as a starting point, my Royal Caribbean example from last week, and I think it's germane. Royal Caribbean, I talked about my sell discipline last week. I'd encourage you to reference that, and it just flat out works. It gets you out of the way of meaningful declines. In this case, 111 to the teens, down 22% in 1 year. And now it's bounced back. So it's 11 to 19 to 86. And, Mike said, maybe it all comes out in the wash, works out in the end. And, down 22%, maybe it's up 22% a year from now. So I dovetail that with my portfolio that I share with you every month, but I do it here because I think this is, I always say, what does the math say? What works? And so if you look at this, everything from blockchain to copper to Bitcoin to e-gaming, agriculture, shorting bonds, uranium, everything's green. There's no losses. Nothing down 22% certainly, and everything's green. And my first response to Mike's thoughtful question was all of these beat Royal Caribbean. And if you own losers, you can invest in winners. And what happens is human nature takes over, and you spend 80% of your time on 20% of the problem children in your portfolio, and so you're not finding new themes that can provide profits. So, in the case of Bitcoin, we're up 229%. We wouldn't have had that opportunity if we didn't have the capital, if the capital was tied up in Royal Caribbean. So that's my first response. My next take is, I think this as a practical matter, there's very true long-term investors, in my opinion. Think about you over the course of this week, the listener, anyone. Did you check your phone, your Robinhood account, your Fidelity account daily this week? And if you tell me you didn't, okay, you might be one of the long-term investors. There's 11 of you out there of this great nation of 350 million people, but most people can't help ourselves, and it isn't right or wrong. It's we now used to have a Quotron that weighed as much as a Buick on your desk, and that's what you had to do to get quotes. Now they're on your phone. trading's free, the accounts are free, and it's just easy. CNBC is seemingly everywhere. And so if you're a really long-term investor, great. Be honest with yourself. That's what you really are. Number two, I think there's a happy medium. I think you can be both. I think you can be long-term in your retirement plan, and this is all we do, my wife and I, is there's 401k, there's index funds, some international, some S&P, and then we add my ideas on top. Because I think I can, I'm not going to be right all the time, but I think if I can find enough good themes, and certainly I have thus far, I can augment what's going on, and I can sort of marry the long term with the short term. So I hope that's helpful. Tell me if it isn't. Give me your comments, and I'll address it in future shows. Next, Jack texted me, my son, and asked about the stimulus bill and its effect on equity markets. And I think that some percentage of the $1,400 that's going to be drifting into accounts right now as we speak this weekend, some of that's going to go into stocks, and I also think some of that's going to go into spending, retail spending. I think I need a new wedge. I really do. That's my excuse now is my short game. Anyway, I bring that up because it dovetails with a buy we had this past week, and I bought the Spider S&P Retail ETF XRT, and you're going to love this. As it turns out, 4% or so of the portfolio, which of course moves around a lot, is GameStop, GME. Yes, I'm touching the stove. Gingerly, with a small amount of money, but I'm mixing my metaphors, but I'm touching the stove a little bit. I've been astonished about how this thing is acted. The earnings call is around March 25th. That is a hard and fast date. And I want to see how they become a digital gaming company. That's the only way I can see they justify this move and the valuation. The Chewy founder is head of a task force or a team that is transforming the company into a digital enterprise. He clearly did that in the pet category. Can it work in gaming? We'll see. I'll never say never. I can't have a hard time envisioning it right now, but I'm in. And also, the rest of the retail ETF, some of that money is going to be going into buying 1-800-Flowers and Albertsons and things like that. So it's a good-looking chart, especially on the weekly, which you see here. It's a weekly closing high. The volume is picking up exactly the way I want. And then let's go to the GameStop chart, Mike. It's the XRT is a more gentle or suppressed version of GameStop. So GameStop is clearly impacting the XRT ETF in a big way. Again, it's 4% or so of the XRT. The market cap now is $18 billion, and the analyst estimates, which I don't know how much they're worth, but this year they're going to lose $2 plus. And I said, tongue-in-cheek, kind of being a wise ass, that the one thing that would drive this thing north is you wake up Monday morning and they've SPAC'd, and they've combined Epic and GameStop into a SPAC, and somehow it becomes Fortnite stop. And that sounded outlandish at the time. It sounds less outlandish when I see Ryan Cohen. About the only thing the company has officially said since all this madness began was that he is leading the charge in terms of transforming the company. I called Chewy too, because again, I can't help myself. I'm a wise ass. And I also was surprised that how strong the stock has been. The short interest has gone from over 70, the shares out 70 million, the shares outstanding, down to 11. So my country song was that, they mopped up all the kerosene. My matches don't matter now. It's a little wordy, but I think it's going to be a hit. And so it's down to about 15% of the shares outstanding. I think the short squeeze is over, But we're here at 265. I thought the lid was 77. I thought it could fill the gap at 212, and it basically blew through those. So something's going on here, folks, and I'm watching with great interest with a very, very small investment. So my take is the stimulus is likely largely priced into the general market. It's been discussed for months. There's no surprise here. I think selling the rumor might have already happened in terms of the NASDAQ stocks. But again, my take is I'm amazed at GME. Another lid is broken, even with the short interest way down. So I hope I addressed that, Jack. Please share this with your Robinhood or your Reddit friends. Thank you. Send your other stocks ideas, and I'll offer a strategy for them as well. It's really fun for me. I hope I'm helpful. Please stay tuned. Next is my themes and groups, and we covered this a lot over the past couple of weeks, but bottom line is I like all my themes that I've mentioned before, and particularly uranium. I'm watching the 200-day moving averages, which we're pretty far away from, to be fair, but I know the market's not cheap. I put up the Buffett chart that Bobby suggested the other day, and there's no way around it. Stocks are expensive, interest rates are going up, and how this tug-of-war plays itself out is going to be very interesting to see. I like the way I'm positioned at the moment. Next, podcast of the week. This is Josh Brown. He's the CEO of Ritholtz Wealth Management, the Compound Show, one of my favorites, consistently good week after week after week. And he interviews Mark Fisher, legendary trader. Joe Terranova was on the show as he says that there's a heavy dose of Long Island accents in this one. I'm from Boston. I gratefully don't have an accent, which is kind of neat. At 106, Mark Fisher says, act like it's pre-Waze and get lost. Meaning you have a small amount of money, real money, and make mistakes and take wrong turns and take dead ends and go into reverse. And I just think it's analogous to my touch the stove analogy. I'm not paternalistic. And I don't think we need a nanny state to say, you fellows with Robinhood's accounts sit on your hands because you don't know what you're doing. Maybe some of you do, maybe some of you don't. We'll find out, and you'll figure it out. And just do it with money that you can afford to lose. That's all. But use real money and learn, keep notes, and I hope that we can help you find the way in some way. So touch the stove gingerly, to go back to my term, get lost but not wayward. And also, for what it's worth, Mark is looking to train traders at MBF Capital. And I've got in the show notes here a link there. He's a big personality, legendary guy. And if you're interested, go to the show notes and check that out. And listen to the podcast. I recommend it. The next one is Barron Streetwise with Jack Howe. I think he's one of the funniest writers in financials. In the financial space. Now, some would say that it's a very low bar, but he's still a funny guy in my view. And he interviewed Kathy Wood, the ARC investment CEO. She's up 152% last year, which is just crazy. And I love the fact that she goes down 20%, or the funds go down 20%, and everybody is, apoplectic that Ron Barron sold Tesla and Tesla has gone down. Are you kidding me? If I'm up 152% down 20, I will do that all day long, every year for years. I mean, now it won't happen that way. The world is too disorganized. But now I will say this: I wouldn't chase her ideas, and if you do, realize that she's longer term. She uses 5-year models in most cases, and she's very high octane. Most of her companies are unprofitable, and she likes that. She likes the fact that they, Amazon it or Netflix it, meaning they plow the money back in the business to build the moat, and then they turn the spigot on, and the cash flows down to the bottom line once the competitive position has been made. Now, reason I bring this up, although the whole podcast is great, at 17 minutes, and this is what I do. I really spoon feed you. I mean, if you want to just go to where I direct you, you can cut really to the wheat from the chaff. But at 17 minutes, She talks about Bitcoin, which in one of her funds is the number 3 position through the Grayscale Bitcoin Trust, GBTC, which I own as well. So I obviously have a vested interest here. She used to work with Art Laffer, legendary economist, creator of the Laffer curve, and they had this debate. They're obviously, very bright people, and said, is this money? Could this be money? And they came to the conclusion that, yes, this could serve as money. And what would that mean? How big could this be? And Art Laffer said to Kathy, well, what's the U.S. monetary base? And at that point in time, it was $4.5 trillion. Now it's $8 trillion. Now, this is simple math. And obviously, I don't want to have a false precision here, but all I did was I took $8 trillion divided by the number of Bitcoin ultimately, which is 21 million, that's the cap, and the Bitcoin price that garners is 380 grand. Now, and I said, that's interesting. And then I went back to the memory banks, and we talked about an interview that the Winklevoss twins did, and they said, well, what if you divide 21 million into gold? Gold is roughly a $10 trillion market cap, if you will, and that gets you to 476. So apparently over the weekend, Mike tells me, Bitcoin is at 60,000, and a reasonable range is basically 380 to 480. You want to round up to $500,000, great, but that's a pretty logical way to get to higher prices from here over time. But as we see, corporation after corporation, led by MicroStrategy, dedicating meaningful amounts of their balance sheets to Bitcoin, we're on our way to these levels, I believe. So argue with me, tell me I'm wrong, tell me I'm right. I'd love to hear the feedback. But some pretty bright people coming up with big numbers. Next, Reporters of the Week. Now, this is from the op-ed page, and this is Dr. Marty Makary. I think I'm pronouncing that correctly. Johns Hopkins professor, and the headline kind of says it all. COVID prescription. Get the vaccine, wait a month, return to normal. And I say this because for some reason, many people still want to cling to the negatives of the pandemic. Yes, 500,000 people dying is horrible out of 350 million U.S. citizens. But the vaccine is a medical marvel. I've never heard of a vaccine coming out in a year. And the people that don't want to get it, well, that's their business. They can do that and take their risks. But this is the fellow that said we're going to be to herd immunity by May. And it looks like he's going to be right. So I just, as investors, I just put this on top of an accelerant to the economy and maybe to the stock market, but you know how I feel about that. My sense is, just by crazy timing, weather's getting warmer, people are getting friskier, the vaccinations go through the roof, people want to get on planes, trains, and automobiles, and all this happens with 1.9 trillion being put on top by Congress. So there's a lot of kerosene being put up here, and I think this matches. The debate is going to be, or the struggle, or the conflict is, how much does this lead to higher interest rates? What's baked in, and how much can stocks go up if the risk-free rate of interest rates goes up? So a lot of push and pull there, but I got to believe the Fed is watching this. I can't be the only one. I certainly, would love to read charts for Chairman Powell, but I just, the world is getting much, much better, folks, and let's take the win in the victory lap and say, God bless America. My take is most are going to take his advice. I sure as heck am. The economy will rip. Rates might rip as well. And again, watch the 200-day moving averages to invoke the sell discipline if you need to. We're not anywhere close to that yet, although in some technology it's already happening. So something to look out for. Next, the Wall Street Journal. And this is about as much of a macro perspective that I ever bring, but it's germane because of one of our investments. So this is why I bring it up. This is by Sam Goldfarb in the Wall Street Journal. Flood of new debt tests bond market. And obviously, I love visuals. Take a look at this chart. This is net Treasury supply versus Fed buying. And it is obviously screaming north. We are issuing treasuries like it's nobody's business. The Fed is buying as much as they can, and rates are still going up. So I don't see how they keep rates from going up from here. It's possible, but this chart sure makes the job look really, really difficult. Next is Treasury debt auction sizes. And again, every maturity is going north big time. And we haven't even gotten to the infrastructure bill, which is going to have another $1 trillion plus to add to all this. So this brings me to my Instagram post, my tweet from a month ago. And I said this when I bought TBF, which is the ProShares short 20-plus year bond ETF. And kept it short and sweet. I said, that's a breakout, folks. I show the 3-year trend that is broken. I think we have a chance to break out of a 40-year trend at some point down the road. And I said, interest rates are going up, bond prices are going down. Full disclosure, I have a position. And I try to avoid bias as best I can, confirmation bias, but everything I see leads to higher rates. So I'll let you know when I find conflicting evidence, but here's what I have thus far. And again, you tell me what you like, don't like about the analysis. Next, I brought up I posted this again last week. It's from September 2020, and I've made, I'm going to give you my bad calls too, but this is from September 2020, my 3 minutes on bond prices going down. Yields at that point were about 60 basis points. Now they're at 160. And I kept it, I recommend it highly. It's a good 3 minutes. And I, in essence, show money supply going north and gold going north. And every time that has happened like this, and frankly, this is the most extreme example we've ever seen, interest rates go up by 250 basis points. So I didn't need to go get a PhD in econometrics to do this. I needed a chart book. And so it's already started to happen. I think it's still going north. I think we still have 150 basis points to go, maybe more. And again, argue with me if you'd like. Next is The Economist. They don't do bylines. They have anonymous reporting. And I don't understand why, because I think they're very, very good. It's one of my favorites. But anyway, they talk about nuclear power must be well regulated, not ditched. And part of this is the 10-year anniversary of Fukushima, the tsunami that swamped. They called it. They have a great phrase: the puddle from hell. Burn burning through the reactor foundation, something along those lines. But this is what caught my eye. Two things have to be remembered. Well-regulated nuclear power is safe. The terrible Soviet-era exception, which is 35 years ago, Chernobyl. 86 was Chernobyl. Nuclear disasters come without large death tolls. I'm sure that's not popular, but it was the tsunami, not the radiation, that claimed 20,000 lives in Fukushima, first. The other is that the climate's in crisis, and nuclear power plants can supply some of the vast amounts of emission-free electricity the world needs to cope. Solar and wind are now much cheaper, but they're intermittent. And so if you're going to have a reliable grid, you need to have base level generating capacity that's available all the time. Nuclear fits that bill without having ongoing emissions, and it's doing so safely and at scale around the world. So I've mentioned I'm bullish on uranium, right? That's come up? Okay. And the hits keep on coming. Next, the New York Times. Peter Goodman, Alexandra Stevenson, Neeraj Kokshi, and Michael Corkery this past week had a great story on freight rates. And this closing paragraph, I think, kind of brings it all home. Peter Baum's company in New York, Baum Essex, uses factories in China, Southeast Asia, to make umbrellas for Costco, cotton bags for Walmart, ceramics for Bed Bath & Beyond. Pretty broad, product mix. And 6 months ago, he was paying $2,500 to ship a 40-foot container to California. quotes, "We just paid $6,000 to $7,000, he said. "This is the highest freight rate that I have seen in 45 years in the business." And that's in a very short period of time. In early September, he waited 90 days just to get a spot on a ship for a container of wicker chairs and tables. So, sidebar, inflation CPI came out this week. It was 0.4%. I don't know what the heck is in that. I could look it up. But, inflation is, there's no way that that's not going to show up in Costco and Bed Bath & Beyond and affect prices paid in very short order. It just doesn't make any sense whatsoever. So do with that what you will, but that also feeds into bonds sucking and prices going down, I think, for a while. Next, my charts and tweets of the week. And I brought this up, and I couldn't find the episode. We had a fan come in and say, hey, I'm really excited about Pfizer because of the vaccine. And so I went back and I said, I'm not that optimistic about that for a host of reasons. Number one, it's Pfizer's a huge company. I don't think they can make a lot of money on the vaccine. I think that's political suicide. And so the stock went from 34 to 43, and here we are at 34. We bought the rumor and we sold the news. And and Pfizer, is doing incredible things for the country and for people and humanity. It's just there's two different things. There's the business and there's the stock price, and the stock price is saying you're not making much money on this and you're going to make it for 2 years and then it's going to go away, and that's what's happened. I bring that up because Moderna looks like a less extreme example of this. Now obviously for them the vaccine is a much it's the only product that they sell, so this has gone from 100 to 189 to 136. And it looks like it's rolled over. It looks like a right shoulder to me that's forming. Again, we bought the rumor. We sold the news. And I didn't put up Novavax, but Novavax just put out positive data. So now the fourth company that's selling vaccines. I think we're going to be swimming in vaccines before you know it. And I think these stocks are going to be underwater, to keep up with my aquatic analogy. Next, newsletters of the week. Bear Traps Report. I really recommend this a lot. Larry McDonald and his team. Capital gains trending on Google. And this is a 10-year chart. I always reference the time, the relative time aspect to these charts. The longer they are, the more meaningful they are. Record highs of capital gains being talked about in Google. I bring that up because they tie it into the very plausible theory, in my view, that much of the decline in 2000, that internet bubble, was due to people selling for to pay hefty capital gains taxes on April 15th of 2000. Well, it's March 13th right now. We're a month away. Don't be shocked if you, and maybe we're already seeing it in the Teslas and the Microsofts and the Amazons, where people have had huge gains and they just taking some off the table, and it might be largely over, but we can't be shocked that these major winners are given some ground back, and this might be a plausible reason why. So my take is that it makes sense to me. Next, cannabis. Mexico set to legalize marijuana. And very likely to become the world's largest market. And they put it in a kind of a cool way, is that the U.S. is going to be sandwiched, my words not theirs, between two pot-selling neighbors. And I just think that politicians, being the way they are going to say, wait a minute, if revenue's going to Mexico, we sure as heck need it in New York, which brings me to the next point that they bring up, that the Senate and Cuomo, if he's still around, because he's in hot water right now, obviously, there could be a deal made in the next couple of weeks to legalize marijuana in New York. And now New Jersey went during the last election, and I stare at Pennsylvania, and I got to believe that that's a reasonable domino to fall in the near future. And I just think the cannabis theme continues to gain steam in my view. That is the show, folks. Please also subscribe to my Bakes Takes YouTube channel. The audio is the same, but the charts that I reference are on the screen. Follow us on Twitter at BakesTakes_ and other social media. Please use your voice memo app, tape your questions, and email to bakes@bakestakespodcast.com or write in if you'd prefer. I'll keep you anonymous if you'd like. Thank you for listening. Mike Wilson is my producer. Thanks as always. Have a great week. This is Bakes, and for much-needed levity, another Massachusetts guy, Pete Holmes. The worst thing to say at a party. Enjoy. I hope you get a chuckle, and I will see you next week. Take care now. Bye.